I'm very excited about the future of media, but I wanted to give you a slightly different viewpoint on this. Four issues dominate the future of communications, and it's stuff that we're talking about all the time. The digital revolution is definitely helping how we understand our clients better, engage in more dialogue with them, enable consistency across the different media channels, and measure responses. However, each of these present a really difficult challenge to Credit Suisse and also to our colleagues in the financial services world if we exclude the retail side of the business and talk about the B2B and high net worth segmentation. First of all, insight. Our target is very reluctant to talk. They don't want open dialogue. So making insights with this group is very hard to gather. Our obligations to confidentiality with our clients and our adherence to legal regulations from the different financial securities organisations around the world also makes it very difficult for us to be transparent and have open two-way dialogue. Our siloed operations also make integration very challenging. So we have, at Credit Suisse, we only have a retail bank in Switzerland. So outside of that, we're really talking about private banking, investment banking and asset management, who all have very different views. And our small and exclusive audience, which we estimate is around about 3 million people globally, so it's a really tiny niche market, is very difficult to research and therefore is very expensive. This is bad enough, but coupled with the widely held belief that marketing and media aren't working, the future can look pretty terrifying. Many academics and communications experts seem to agree on one thing: the old-fashioned advertising model is now broken. It just depends on the different viewpoints. So, what is the extent of the damage? Byron Sharp, in his book How Brands Grow, quoted Duplessis' research into brand recognition into TV ads. Basically, 84% of it doesn't work. Seth Godin, in his book Meatball Sunday, says most of it doesn't. And Phil Kotler, in the preface to Martin Lindstrom's book Brand Sense, says none of it does. So where are we? What I find at Credit Suisse is that most of the bankers would agree. They have very strong sentiments about particularly advertising, and in fact, they have said things to me like, why are we spending all this money on advertising? Why don't I just send my client a bottle of wine? Difficult to argue with that sentiment. So these issues are not unique to Credit Suisse in the banking sector, and generally speaking, this kind of backdrop, unsurprisingly, can have a significant effect on the marketer's behaviour. We have to make a lot of assumptions about our target market. We have very little data to go on, and with the highly restrictive, regulated area that we work in, risk aversion becomes prevalent. A huge number of internal stakeholders that we have, also with their varying agendas, means that trying to placate them can also lead to a lowest common denominator approach. Indeed, such circumstances can make marketers view their internal audience more heavily than the external. And the problem that this can lead to also runs into the creative and media strategies. So excuse anyone who is from one of my competitors who's in the room, but our images are up here as well. Imagery tends to look like this. Two people talking together, the client-banker relationship, very cliched, unsubtle symbols of business and material success like the yacht. So what actually separates us? Well, it's basically only the logo. But also in media, our media usage is also very print myopic. You can see from this chart, this is 2009-2010, pan-regional and 9 of our key local markets, that the predominant spend is in the print media. By comparison, the percentage committed to digital in this space of time ranged from 0 to 15%. So we're not exactly a forward-thinking sector. So what do we get? If we combine generic images with predictable media, the only way we can differentiate ourselves is through what we spend. At Credit Suisse, we're not the biggest spender, as those of you in the audience who work with us will know. And we had no intention of spending our way to the top of the awareness levels. So we had to be clever and we had to be different so that we could be better. But what happens when you only differentiate by spend? The only beneficiary is, when you can decide. So we embraced the future. And in 2011, we sat down at the beginning of the year and we really thought about how we could be different and how we could actually create something that would take us forward in the financial services sector. So we looked at not just the media, but also the creative. And we created a new campaign which launched in October last year, which features our own clients. Now, that in itself isn't revolutionary, but what we wanted to do was actually use our clients in a very different way, in a more emotional way, to show how we help our clients thrive and how we can showcase their goals and ambitions and use the advertising as a mouthpiece for them rather than for us. And in media terms, that meant we had to make some changes as well. So we actually moved our budget from, I think in 2007 we were spending 3% of our budget in digital. We now exceed 30% of our budget in digital. So we think that we're actually moving along, but it's slow. And I understand there was a social media event here last week, and an analogy was made about social media and digital. And it was, the analogy was that it's very much like teenage sex. Everyone's really excited about it and looking forward to doing it, but no one really knows what they're doing. The first attempt is generally disappointing, but then it gets better with practice. So in 2011, we practiced quite a lot, which wasn't an easy thing to justify internally, as being Swiss is not about being revolutionary. But we think we have created a small revolution, which we hope will start to help differentiate us, and the post-testing of the launch campaign has proved very successful. So here are some examples of our advertising. This is Jen Cow, who's a private banking client, a fashion designer. Ernst Tanner, who is the CEO of Lindt, one of our largest corporate clients. Maccaferry, who are an industrial conglomerate who actually developed and built the flood controls for Venice. Baidu, who is the Google of China, who's also a client of ours. And Zermatt Bergbahn, who run the Zermatt ski resort, who are a local Swiss client. What we tried to do in these ads is actually align the imagery and the style of the advertising with the luxury space. We looked at a lot of luxury advertisers. We looked at the way they use imagery. It's very engaging, it's very intriguing, it draws you in, but also there's not a lot of copy. In the banking industry, we tend to like to write reams of copy about ourselves, but this is really very succinct. And this actually, the ads all push the reader through to our website, where we have a lot of digital content, which obviously I'll talk about in a second, and trying to bring the client's story to life. But from a digital perspective, because we are talking about the future of media, this is where I guess the tanker is about halfway round the bend right now. We partnered with Intelligent Life, and we will be working with them again for this year with the Intelligent Life app. We work very closely with them, developing all the technology that both they and we wanted to make our clients' stories come to life. A lot of video content, actually taking over the whole of the Intelligent Life app. And Alex gave me some very good news this morning when she arrived, that the downloads of the Intelligent Life app are now up over the 270,000 mark. So for us, this is a really targeted use of our media money, enabling us to reach out into that ultra high net worth and high net worth space in a sort of more business lifestyle environment. As we are at Bloomberg, I thought I would also let you know that we are the first sponsors of the Bloomberg TV app. Bloomberg wanted to launch this app, and it launched in Q4 last year. We felt that this was a really good partner to the Intelligent Life app that we had. So Intelligent Life, very much more that lifestyle side of the business, with Bloomberg really delivering that business audience that is another key part of our target audience. So the app has been very successful. I think the latest numbers are about 10 million impressions for Credit Suisse. We got a lot of PR coverage. It's very engaging because we can actually, like we have done with Intelligent Life, put a lot of video content and engaging content on there. And the app has achieved an average CTR of 0.37 compared with a benchmark for our audience of 0.08. So we're very happy with the performance of that. But we also have started to use digital for a lot of our sponsorship activity. I don't know if any of you saw the Leonardo da Vinci exhibition, which we supported with the National Gallery. We're a partner of the National Gallery. And what we wanted to do was really bring Leonardo to life. We knew it was going to be a blockbuster exhibition. And so we built these special units at London City and in the first-class lounges at British Airways at Heathrow, where people could go and experience the Leonardo da Vinci studio. There was lots of interesting content on there, giving them a flavour of the exhibition before actually going to see it. And the ad campaign also had a major hoarding outside the National Gallery with the QR code for people to download the app, which also was very successful. I think we ended up with about 20,000 downloads on the app, so we were very happy with that. So, you know, we are moving slowly, but I think we're moving in the right direction. For us, it's about how do we reach our target market in a sophisticated but intelligent way, using digital so that, you know, it's in a space that they engage with, rather than being a sort of 14-year-old teenager with, you know, 5 mobile phones and whatever else they have. You know, we know all our audience own iPads. We just don't know how many of them know how to use them. And David Goodall will tell you that I'm one of those that still needs a bit of instruction. So to conclude, new opportunities in media present big challenges to the banking sector. Client confidentiality versus open dialogue. Risk aversion is the current default position. But we can break through, and we can create interesting, creative, and use radical media in our space. It's about relevance. It's about making what we have to offer to that very targeted market very relevant to them. But the future's bright even for the bankers, so thank you very much.